Voice good, screen good. Hey. Perfect. Welcome back to the live room. Happy Tuesday to you. Since I usually say Monday, happy Tuesday to you. Great to be back. We've seen some nice movement in the market, which I'm excited about. Had a lot of predictions over the last few weeks play out, and it's just I'm in a very confident state in my trading. It's pretty cool. I'm excited about that. But good morning. Hey Nick, welcome back. Good to see you. I was thinking about some things this morning, and I may end up doing a podcast on it, or I may just never do it because my to-do list has gotten way too big again. But I was just looking at obviously, it's been a slow year. The markets have not been the most entertaining. And I was just looking through a lot of predictions I do. You guys know I do reviews and all this stuff. And the majority of the opportunities, and maybe it seems this way because I'm a little bit biased, but the majority of the better trading opportunities that I've seen have come on pairs that I don't trade. And again, there's probably a little bit of recency bias to that as well because I'm paying attention to that more since I don't trade it. But it was entertaining the thought of expanding the portfolio again. And this comes off yesterday's conversation in the Q&A about how that affects position sizing and risk management and all that fun stuff. And just an interesting thought. But it reminded me of I showed you guys this before in a Q&A session about, I think it was a chart. I don't have it on me, but it was a chart. Any of you guys remember me showing you a chart about how much it takes, what percentage, I think it's called the percent recovery formula. There's a podcast on it. I think I titled the podcast Percent Recovery Formula. Let me just see real quick. I can give you a look on YouTube, but it got my mind thinking all these places, and it reminded me of the conversation we had yesterday about risk management, position sizing, and how much it actually takes to drag yourself out of a drawdown. Just give me a second here. Trading Coach Podcast Percent Recovery. Am I right here? There we go. The Percentage Recovery Formula. Episode 58, in the very beginning stages of the Trading Coach Podcast. But I was reading this quote, and I think it's just pretty cool for you guys that are new to put things in perspective. If you have $100,000, right? Do the math with me. If you have $100,000 and you lose 50%, right? You take a 50% drawdown because you guys are trading a position size that's way too big. You hit a massive drawdown, right? $100,000, you lose 50%. How much money do you have left? Quick math. Right? You have 50K, right? You lost half of it. Okay. So, if you are able to generate a 50% return, right? You lost 50%, you went from 100K to 50K. But then you're now able to hit a little bit of a hot streak, right? Because, newer traders get lucky. They get lucky sometimes with hot streaks. They get unlucky with cold streaks. That's how they go. But let's say you get lucky and you hit a 50% return. After losing a 50% return, how much money do you now have? Yeah, 75K. Now, you're I don't want to say your average trader, but a lot of the newer traders would think, oh, I lost 50%. I just gained 50%. I'm back to break even. No. When you hit a drawdown, you have to do twice. A drawdown that causes you to adjust your position size, obviously. Basically, you have to do twice the amount of work just to get back to break even. And the quote goes, if you have $100,000 and you lose 50%, then you have $50,000 left. So you have a 50% return. If you have a 50% return, you only have 75,000. So you need to double it in order to make a full 100% return in order to get back to break even. If you lose 10%, it takes 11% to get back to break even. If you lose 20%, it takes 25% to get back to break even. And if you lose 75%, if you hit a 75% drawdown, can you guess how much is needed to get back to break even? You need a 300% return. Crazy, right? Crazy. And if this doesn't transform your thinking on risk management, I don't know what does. You know, I still get made fun of because I've always preached something different than what most people preach out there, right? And people are finally starting to catch up, which is pretty cool because for the longest time I've preached a philosophy, the same philosophy I'm preaching now. And guess what happened to me? I got laughed at. Everyone laughed at me. I got laughed at the other day. I told you that story about the guy when I was talking about how you have to be comfortable with losing. I get laughed at. And it was one of those nervous laughters, right? Where it's a scared laugh where they know you're right. What are you talking about? I hope no one listens to him. He can't expose the real truth. Because we're screwed. No one's going to buy our secret system. You don't know what you're talking about. Keep an eye on him. And now people are finally catching up. Everyone's preaching this. And I'm not the only one. I didn't invent this stuff. I learned it from my mentor. And there are great traders and mentors out there teaching it as well. Just the majority of it was overshadowed by the scammers and whatnot. But this is why risk management is so important, right? If you have a 10% return and it takes 11% to get out, okay, that's basically the same. If you have a 20% loss, I should say, and it takes you 25% to get out to break even, that's a little bit harder. It's right in front of you why it's so important to keep your drawdowns small. If you have a 1% drawdown, is there any struggle in getting back out of that drawdown? If you have a 2% drawdown, a 5% drawdown, right? What would you say is your average drawdown? Anybody? What's like not a bad one, but like what's an average one? Like a losing streak, 5%? Yeah. Is you don't have to do anything different. It's natural. You're not in any trouble. George loses 4 to 5%, he trades the normal way and he'll make up for it. But for the traders that take on that extra risk, trying to make that extra reward, and they dig themselves into a hole, man, they make life hard. They make life hard and so hard to recover. So anyway, let's get started today. Welcome to the live room. Is this anyone's first day? I try to kill a little bit of time because I know you guys like to be fashionably late. But if it is your first day, welcome. Just shoot me a note and I can do a little bit of an introduction. But we start off today, as always, by taking a look at the economic calendar. If you guys saw the Trading Edge video this week, you know it is a very busy week for the fundamentals. Starting with today. Today we have our Fed Chair Powell speaking at about 9:55. There is some interest in the U.S. about interest rates and what is the potential future. So the market will be looking forward to this speech to see if there are any clues, especially with this returned trade war happening. By the way, President Trump in the UK, in London, I believe today. Thank you guys for taking them off our hands for a little bit. Welcome, by the way. Yeah, he's talking to the Queen in May. It was funny. I was listening to. I guess I caught a very specific part of it because we try not to get into politics. Who likes who, whatever like that. But I turned on Bloomberg this morning. I watch about 15 minutes each morning, and this lady was just. I think she's running for some type of secretary role, perhaps. And she was fired up. She's like, it is disrespectful for him to be here in front of the Queen and this and this and this. And she was just, again, only one opinion. But it was, no, we're not getting into politics at all. Don't worry. But it was funny because it was basically like, I felt like she was talking to me. And she was like, you take him back, U.S. You take him back. We don't want him over here. And I'm like, man, I'm like, wow, she's very opinionated. And that was the first I heard of it this morning. But yeah, he's over there talking. Again, there's still the trade war stuff going on. Powell is speaking today about interest rates, or Powell is speaking today, if anything, about interest rates or the state of our economy comes up that could shift the market. And then later on today, we have GDP news coming out for the Australian dollar. So again, it's going to be a busy news week. We'll take it one day at a time. For you guys that are new, we don't trade fundamentals here. At least I don't trade fundamentals here. But I do think it's important to be aware of them. That way, we know when to be, basically, if there's a major news event that is going to bring potential randomness to the market, we know when to avoid it. We know when to keep our powder dry. We know when to say, hey, we're going to give this news event maybe 15 minutes to blow over. That way we don't get caught in a position that we may not want to be in. Nick says, same as here. It's just a distraction from trading. You don't want to talk politics, guys? No? You want to talk politics and religion at the same time? See what happens if we do that? All right, let's get started today. There's a difference? Good one. Let's get started today. I have a few things on my watch list. Let's start. What do I think is going to be best suited for you? There's a bunch of pairs out there that are ready for reversals. I am in a Eurodollar Gartley. Let's start with pound yen. This is a juicy one. Does anyone trade dollar Swiss? Dollar Swiss. We did get the rally down. Again, this is something that we've been looking at for 2 weeks. We started the initial analysis 2 weeks ago. We followed it up last week. We did get the rally. I did not think we were going to follow up after that three drive, and we did the 3 drives up and we came right back down. So now it's a bat pattern. So let's actually start on this, and then we'll head over to pound yen. Pound yen is a very nice bear pennant. Was a bear pennant. We'll see what it ends up being now next, but we'll look at that. But dollar Swiss, just to give you guys a brief recap. And if you are new, try not to get overwhelmed. There's going to be the speed may be a little bit fast. I'll try to slow down. There's going to be a lot of terminology. Just focus on the process of analysis, not necessarily the specific terminology. You'll get used to that as you spend more time in the live room. You'll see that I do the same analysis on every pair every single day. But just be a fly on the wall. Watch. If you have questions, don't hesitate to ask myself. Don't hesitate to ask the other traders in the room. This is not like one of those trading forums where we will make you seem bad for every question you ask, right? I've been in trading forums like that where I'm saying, hey guys, what is this RSI divergence? You stupid trader, you don't know? Like, no, that's why I'm asking. Well, you better find out. That's why I'm asking. It's not one of those forums where you'll get discouraged. It's one where myself and our traders will help you out as much as we can. I've been in forums like that, Latch, where it's like, yeah, I ask a question and I get laughed at for asking a question. It's like, why would you ask that? Because I want to know the answer. You should know the answer. Well, I don't. That's why I'm asking you. Like, how else am I supposed? I don't understand how else I'm supposed to get the answer if I don't ask it. Like, it used to get me so upset. And then I realized that they probably don't know the answer. That's why they're just laughing at me and not telling me. But dollar Swiss on the daily. We've come down, right? We do a process. IPDE, identify, predict, decide, execute. Identify. Where's the market trading at right now? What is the market doing? What would you guys say? And we can actually have another pattern setting up as well, right? We are at previous structure. Previous structure support. Now, just a heads up, and we can look at this a little bit later. We could have a potential cipher here as well. X to A to B, B to C. Check that C leg. A CD completion a little bit lower at 98.27. So if we break, if you see this as a cipher pattern, you can look at this as a cipher as well, or potential cipher setting up as well. But currently, identify that we are trading at previous structure support, and we've had a very high momentum move to get there. You look at the last 2 days, right? 2 big, strong, bearish candles. Right? The falling knife, as some would say, coming right into that previous level support. However, there are signs of buying pressure at that level. How do we know? Well, because the market just hasn't blasted right through, right? If the selling pressure was that strong, the market would have blasted right through that level. So, thinking a level deeper, there are 2 things happening at this level, right? Obviously, the buying pressure is outweighing the selling pressure. Would you guys agree? At this moment, because it's stopped. Who knows if it's going to continue? We don't know. But at this moment, we are seeing some buying pressure enter the market. Now, this buying pressure is entering the market for two reasons, right? What are those two reasons? Again, I like thinking a little bit deeper. It helps me. I know some of you guys have mentioned that you like it as well, so I'll try to sneak this in whenever I can. But buying pressure, where's the buying pressure coming in from? Right? Yeah. One, new buyers that are interested in support. Two, buyers that, well, sellers that are now buying because they're looking to get profits off the table. Does that make sense? Something I like to look for in the market. I like to look for levels, and this is why I'm a structure trader. I like to look at levels where both parties are interested, right? I think this level, that white box, is important for both parties, right? Because I know, and I have the luxury of being both a counter trend and a trend continuation trader, so I've done both, so I can kind of flip my mind to like where I would look for both. So I can look from this as a counter trend perspective, and I'm saying, okay, that's a major level of structure. That's our last outside return. That's a decent level that I would look for to get long. And in the same way, if I was a trader getting short, I would look here and I would say, you know what? Yeah, that's probably where I want to take some profits at, right? So if both sides are thinking that way, we typically see some type of reaction. Now, again, do we see a continuation in that reaction? Who knows? I don't know. I never know whether support and resistance is going to hold or not. If I did, I'd never lose a trade again. But we never know. That's the battle. But at least you can gain confidence in pinpointing these important places. Because I would tell you what, if this level wasn't important, the market would have never stopped there. And I'm sure you guys have seen moves like that before, where you ID a level, the market goes right through, and you're like, oh, okay, well. So the fact that the market is stopping and playing around a little bit tells us that there is some importance to this level. Now, this is also an advanced pattern formation, right? It's an AB equals CD in an advanced pattern formation. We have an AB equals C from our bigger move. This was the trend continuation move that we looked at a couple weeks ago, right? 1-to-1 measured move right down at this level. Should be a 1618 Fibonacci extension down there. So if I take my Fibonacci extension tool from my swing high to my swing low and back up, should be a 1618 Fibonacci extension down at that level. We also have a little bit lower, 99-cent even handle, so a psychological number down here. And of course, for you guys that are advanced pattern traders, we have an X to A to B, B to C, C to D, bat pattern down there as well. So if you are a CTS trader, you should have a pretty decent score down here. You've got major structure looking left. You've got an AB equals CD pattern. You've got Fibonacci confluence. You've got an advanced pattern formation. Now, what you would need, right, if you've looked at this and you said, hey, this matches my CTS score, this is enough for me to buy, the only thing you need next is your reason for entry. Right? So something you might want to do for your reason for entry is drop down to a lower time frame, say a 4-hour chart, and ask yourself, or ask your trading plan, what do I need to enter this trade? Do I need a higher high, higher close? Do I need a double bottom? Do I need a 2618? Do I need, whatever else it may be? And then if the market gives you that, then you execute the trade. So right now, price is stalling at that level. Again, if you're a bat pattern trader, you can still get in at market. We are right at the entry, 99.33s, or a little bit below it, 99.31s. If you need something else, the higher high, higher close occurred right on this small candle in here, right? RSI did go oversold, and we had our higher high, higher close at the same level, about 99.32. Something that you always want to ask yourself before ever entering a trade, right, is where do stops need to go and where do targets need to go? And that's how you measure out your risk reward. So if I enter this trade, where am I predicting that price action will go to? If I'm entering this trade, then where am I predicting that price action won't go to? And that's how you're going to measure out your stops and targets. So We can go one more level deeper here on the 60-minute chart on dollar Swiss. Gives you a little double bottom here. You can make the case, yeah, technically for a 26.18 as well. You do get a higher high, higher close here. So you had your double bottom right here at this red candle, 99.18. This would be your 26.18. Now this is one that may look clearer on a range bar chart, guys. On a higher time frame range bar chart, so we can check it out. But if you're a 26.18 trader, this is your entry right here. I'd probably look about right here, $1 even, a little bit below that for first targets. You can see right at this consolidation. That's a nice solid level to go for target ones. If you're measuring out risk reward, let's just say you're entering at market and you're putting stops below here. You've got a potential risk that looks like this. You've got a potential reward that looks like that. Pretty decent risk reward opportunity here if you're going for that level. Any questions on dollar Swiss so far? Anybody in this trade? Anybody trade dollar Swiss? I don't think a lot of you do. Just curious. I remember asking this before, and everyone's like, nope, I don't trade them. Still a cool example. All right, so let's go down to the range bar chart. Let's go down to the 15 and whatnot first, 15 and 5. Stick on our minute time frames. So you can see a nice rotation here. And again, this is a, nice 26.18. Interesting move here. Because the market actually puts in kind of a, I guess it's not technically a complex pullback, but a double-legged move up here to break structure. And then we come right back down and look left. So if you really want to be aggressive here, what do you think you can do in this situation? I don't think this is it might be a lower low, lower close there. That lower low, lower close would mess things up. Yeah. Now this lower low, lower close changes things, but imagine that this was an equal low. Here's a way you can play this if you want to be really aggressive. And again, this is not the case because we did have a lower low, lower close. That would technically change things for me. There's a lot of interpretation and flexibility in trading, but I believe that everything you do has to be backed by a rules-based kind of backbone, and that lower low, lower close is going to be a rules-based background. So we come down to here, right? Let's say we retest previous structural lows and we hold this level, right? This can be a situation where you look for, let's say you get a higher high, higher close on this candle. Instead of treating it like a 26.18 and having the stop all the way down here, right? You can now base your stop underneath this level, right? So we're looking at, let's see, a 1 ATR stop would be about 14s. Again, a lot more aggressive, obviously, but an opportunity for you guys that really like risk rewards. Now you have a situation where your risk is like that. Let's say you're still shooting for that dollar level. Now your reward is up there. Now the question is, is which one do you do? That's a common question I get. It's a pro and a con. It all depends on if you accept the fact that, hey, I am willing to be more aggressive to get into a trade, and if I get skunked out, I'm willing to enter again. Or if you'd rather be more conservative in your stops, have the wider stops, and have a less opportunity of getting skunked out of the market. Does that make sense? George says, you can click the scroller on the mouse and it'll show you the open, high, low, close. So George says you click the little scroll thing on your mouse, you can get this information on your chart, open, high, close, low. Let's go down to the 5-minute chart. 5-minute, same situation, little double bottom here. So a double bottom at that level. Now you can see here's something interesting, right? Rarely do you see this. On the 5-minute, it's actually not a lower low, lower close. Right? Nope, it is. It is. It is. We still do it right here. Never mind. Thought we held that. Thought this was the one that held. It still is. I take it back. I take it back. This one does close below. All right, so let's get on to the range bar chart and see if that gives us a different story. I'm going to start off on a higher range bar chart. I'm going to go to a 130. This is the 50 range. This is going to give you basically the same picture as what we're seeing on the 15 and the 5. We go to a 130 range. This should be equivalent to the hourly time frame. Let's want to see if this gives us a different story. So you can still see the double top there or double bottom there. Doesn't really change perspective for us any. Yeah, it doesn't really change much for us here. So decent buying opportunity on the dollar Swiss, whether you're doing it based off of structure, whether you're doing it based off of an advanced pattern formation. Obviously, the advanced pattern formation is a much more easier case for entry because you should just buy it right now at market. Any questions on the dollar Swiss before we move on? The range bar didn't have a lower low, lower close. Yeah, and that's gonna give you a different perspective. Yep. I thought we just get a different view of the double bottom. Good series on dollar Swiss. And if we just go back real quick to what we originally looked at, and we'll give Latch some credit. We had the 3 drives right here. This blue line, this is where our entry was. And I was all about a short until we didn't get this follow through. And obviously there was no real entry reason right here for me. But we got the 3 drives up here. 1, 2. I guess not technically 3 drives. What was that it? Hold on. Yeah, that one. This was the first one, yeah. And then we got a retest right here. After we got this retest, I didn't think we'd see the follow through. I did not think we would see that follow through. I thought we'd see it on the second retest right here. But here's the cool thing. So let's say you would have gotten involved in this second retest. Would you have ever been stopped out of a trade? No. Right? Market never traveled above these highs. Market never traveled above these highs. But it brings me back to something that I would have done as a trader. The old me, right? So I told you guys, I was looking at this second drive, this complex pullback. This would have been an ideal place for me to enter the market, right? Once we got this third one, right, I would have started lacking confidence. And again, I walked you guys through this in the live room. I said, you know what? I don't think we're going to see it here, right? We got that deep retracement, and then the market came back up. We didn't see that follow through. Here's what rookie Akil would have done, right? So I would have entered here. I would have got short, been all excited, right? Oh, good prediction. Let's do it. And then the market would have came up here. And guess what I would have done? Yep, I would have got out. Now, this is before I had I had a real philosophy on the market and rules, because from a technical perspective, right? From a technical perspective, would there be, we never had a higher high, higher close above my entry. So there's no violation. Technically speaking, there's no reason to be scared out of the trade. But I would have convinced myself, right? I would have convinced myself, well, good moves don't last, and we got that follow through. We came back down in the structure. This is really a trend continuation trade on the other side. I should just get out for break even. Because my stops would be up here. I'd be measuring risk, and I'd be like, oh no, I don't want to lose 40 pips. And I would get out for break even. And I would tell myself that, yeah, I just saved 40 pips by getting out. Trade management, baby, yeah. Right? And then I'd come back after the weekend and I would see this. And how do you think I would feel? Yeah. horrible. And this would consistently happen, man. This would consistently happen. I always like to think I was good at making predictions. I just wasn't good at seeing them through. And this would consistently happen. Just the trading, the psychological side just wasn't there. I would get so scared, that I would psych myself out. I'd exit, and then I'd come back, and the market would do what I would need to do, what I thought it would do, and I wouldn't have any money. And then what I would do is, before I started accepting my own flaws or my own faults, I would just tap myself on the back, but like, yeah, you know what? Good prediction, Akil. You'll get them next time. Right? But like, what's the point if I'm not going to follow it through? It's like I've worked with football players before who can't catch the ball. Right? I had a buddy that couldn't. I was trying to train him for the combine, NFL combine, and he just couldn't catch, man. Like, he was a receiver, he just couldn't catch, and that was the main problem. He's fast as anything, he just couldn't catch. And we were working out, and we would yeah, even with the cheating gloves, yeah. Well, this was before the cheating gloves were like as cheating as they are now. They weren't as sticky. Stickum. Maybe I'll just bring Stickum back. But he would run routes. The quarterback would throw him the ball, and he'd miss it, and he'd come back like shaking his head, like yeah. And then, like, in my head, I'm like, why are you so excited? He's like, yeah, I ran a good route. Did you see that cut? I got all that separation from the defender. I'm like, yeah, okay, that's that is great. Like, that's the main thing in NFL. One of the main things an NFL receiver needs is you need to create separation. But at the end of the day, you keep dropping the ball. Like, I don't care how much separation you have. If you can't catch the ball, like, what's the point? What's the point? Nick says, great separation from the hands in your ball. Yeah. So it's one of those things where, like, I'm so great at predictions, and then my P&L is like, in the red. I'm like, okay, well, I guess at the end of the day. So yeah, good stuff here. And then now we're going the opposite direction. So I'm excited about this. Again, I'm taking a lot of wins from, this is not a pair in my portfolio, so I'm taking a lot of mental wins from just predictions this year. That's kind of what has soothed me from these slow markets. So let's go to, I'm supposed to be keeping track of what order we discussed this stuff in. Remember that, Akil? Let's go to pound. No. Sorry, guys. Hold on. There you go. Let's go to pound yen next. Breakout traders. This one may be for you. Great profit, horrible trader. Yeah. Pound yen, right? Potential. We had a pennant pattern forming. It may be turning now into a sideways channel, a low and tight flag, actually. We'll see. Things morph over time. That's why the live markets are different from a trading book. The trading book only catches the ideal opportunities. The live market kind of evolves. Which once was a caterpillar is now a butterfly. All right, so first step, identify pound yen. What are your thoughts? What are your thoughts? Are we at structure, near structure, in between structure? Obviously, we've been nosediving. Most pound pairs have been doing that. Kind of the saying over this year in the market was, as far as the pound pairs go, just get short. It reminds me of like the euro. Was it 2010 maybe? Like just buy it. I think it was 2010. Might have been before that. Just buy it. Pound yen's been pound pairs this year have been the same thing. Just sell it. You don't need a reason. Just sell it. Just sell it at any point, and you'll make money. Over the last few months, but yeah, we can still go a little bit lower. We're close. We're close to the infamous zone of this mega wick, but we still have room to go a little bit lower to about 136. $1.36 before it enters my danger zone. Now we can go all the way to 131. we can test this entire range, but it gets a little bit harder to make those predictions once we get past these daily closes. Right? So 136. So we're right up, we're in a structure zone, but we can still go a little bit lower. So there is kind of that, I guess that there was that chance, I guess you can say. Moving down to the 240, and again, Akil, you're supposed to type in when we're looking at this, pound yen, 35 minutes. There we go. Why do I give myself more work? Why? I should make the intern do this. Tony says, I was looking long this morning. So here in the 240, here's what we're doing, right? You'll see this clearly on the hourly. This can be one of many things. This can be a potential continuation pattern. This can be a potential reversal pattern. Where we're at the market, 50-50 chance could be either one. Right? There really isn't much of an edge. We are at structure, so this could be a counter trend move. This could be the market bottoming out and starting to reverse. We're seeing that with a heck of a lot of pairs around the market. This could be a continuation pattern. This could be the market taking a brief pause, a pregnant pause, I like to say, before continuing down. Now, does this confuse anybody? Akil, how can it be both? What do you do? What do you do? What do I always say? We want to be predictive in our analysis and what in our execution? Reactive. So this is a situation where you wait. So when you get more experience as a trader, you start to develop a lot of flexibility, right? I'm very flexible. Stretch every day, right? I don't stretch at all. I'm not flexible. My hips are horrible. But in the markets, I'm very flexible, meaning that I have the ability to be aggressive. I have the ability to be conservative. Now it all fits within rules. I can't just be like, I'm going to be aggressive today, limit order. No, right? It all fits within rules, but I have the ability to be aggressive in great situations with good risk rewards. I have the ability to be conservative in iffy situations with bad risk rewards. This is one of those situations where normally, right? And we'll just go down to the hourly real quick. I think it'll give a better view. And I'll show you what I was looking at last night. Normally, if you see this on your hourly, right? Imagine it right here. And if we're in the middle of no man's land, right? What type of pattern is this? It's a bear pennant pattern, right? A bear pennant pattern. If it's at the middle of no man's land, this is a classic trend continuation setup. We've come off a strong bearish move. The market's consolidated a little bit. The expectation is that we continue with another leg down. However, knowing that we're in that area of structure on the higher time frame makes you want to think twice. So instead of, say, just aggressively trading it and being like, hey, I'm going to get in at any point in here. I'm going to get in at any point, stops above here, because I'm playing for a big breakout down lower. Instead of being that aggressive, because you know we're at a level of structure, what secondary approach do you think you may take? Instead of just randomly entering at any given point because you don't really care about the best entry, you just want to be involved before it breaks out. What's the secondary approach you should take? And this is why higher time frames are so important to know where we're at in the market. Yeah, you say, you know what? Normally, I would be very aggressive in this pattern formation if we were in the middle of nowhere. But because we're at that iffy zone in the market, I'm going to be a little bit more conservative because this could also, right, the chances of this being a reversal are there as well. So I'm going to wait for a conservative approach, whatever that conservative approach may be, and then look to get involved in the trade. So again, this has kind of morphed. It's a little bit different here on the 240. We'll just go back to the hourly, but we want to measure out our range here, right? We want to measure out our range here. And we see that we have lows down here. And we have highs up here. This one's going to stink a little bit, but it happens. right? I would wait for the market to show us which way it wants to go. And we had a false breakout. We can actually look at this. This was our original false breakout right here, right? What do we talk about false breakouts? You guys see it? We've been learning about this a lot lately in the live room. Same as oil. What do we have there? Yeah, you have your breakout, your red candle, which is technically your breakout, and then you have your immediate engulfing. So, which is going to give us a sign of a false breakout, which is going to lower our level for a real breakout. Now, I would tell you what, there's two things that happen here as far as false breakouts. What's the other rule we talked about for false breakouts? Not a rule that I follow yet, but something I told you a lot of experienced traders use. What about the range? 50% of the range, right? So we look at our range right here, right? We have two things that happen. We have the false breakout below. We have the violation of the midway point of our channel, right? So basically two signs of false breakouts. This would give me more reason to keep an eye on what? If we're getting false breakouts to the downside, we should start being prepared for a move to the upside. So keep an eye out for it. Who knows with this? We can go sideways forever. I don't know. But I would keep an eye for a move to the upside. So I would look for a break of this range. I'm a horizontal support and resistance person. So I like drawing these things sideways, this yellow line. By all means, though, if you're a trend line trader, right, connect these dots. Connect this high to this high and figure it out. I can't give you a lot of advice on trend lines. I just don't trade them. We'll look at gold a little bit later. Gold had a big breakout of a flag pattern, a pennant pattern. But by all means, if you're a trend line trader, you should have rules on how to trade trend lines. So trade them with that breakout and retest mindset as well. But I'll be looking for the horizontal line. That's just the way I get down. Naomi says, I don't understand. Can you please explain the 50% retracement, please? Sure. A lot of traders say that it is considered a false breakout if we get a breakout and then price returns past the midway of the range. So if we break out of a consolidation pattern, price on the pullback should not come back past the halfway part of that range. Close beyond, I don't know. I've never tested it. But I think it should. I think any point of price. So I don't know if they take into close or just a test into account. It may differ per trader. But it shouldn't come to that. It shouldn't come past that 50% point of the range. For me, closes are always more important. So if I were to use a rule like that, I suppose I would use close. Tony says, depends on how you measure the range. Always. I mean, yeah. If you're whenever you use a Fibonacci, it always depends on where you draw it from. In my opinion, the range should always be measured the same way, your highest point to your lowest point. So you find in this situation, right? Here's your lowest point of the range right here. Or I guess, sorry, I had the wrong thing drawn in. Your lowest point of the range is right here. Would you guys agree? Well, actually, no. It was right here because this is your, that was your breakout. So your lowest point of the range is right here. Boom. Your highest point of the range is right here. So this is the swing low to swing high that I would measure for your range. This move right here, high to low. You can do the math and calculate it. You can say 137.28 and 136.61, or you can just take the fib, draw it from high to low, and it'll put your 50% right in the middle. Now, if you measure a range a different way, that's fine. Just be consistent with it. Again, what matters the most is that you're consistent in how you do it. But I always look for the high point, the highest and lowest swing or what I measure as far as the range goes. Keep pushing that euro down, guys. Keep pushing it. Keep pushing it down. Tony says, yeah, I use the wicks, tops and bottoms. Some don't. Yeah, that's true. Here's what I don't understand, though, right? I don't understand why people don't use wicks. I don't understand the point of a measurement without the wick. If you're measuring ranges, that makes, and obviously I'm biased in the way I do it, but it makes zero sense to me. Why would you discount the wick as if price didn't reach that level? As far as like measuring a range, I would love to ask a trader why. Because the wick represents price. I mean, did price not travel to that level? Is that not the extreme of the move? Now, trend lines makes a little bit more sense. Even though I would still, I would still do wicks on trend line, but trend line makes a little bit more sense. I've seen, closes are more important. So maybe, I don't know, but yeah, I would always use the wicks. Price moved to that point. It should be noted. Yeah, it should be noted. But yeah, but like I said, everyone's different. And look, as I mentioned to the trader yesterday, who was probably upset with my I didn't give him a one-word answer. I was going to, and I didn't. Yeah, as long as they're doing it consistently, and as long as it works for them. As long as it works for them. All right, so let's go down to what am I looking at here? Euro dollar. Get that away from here. Let's go down to the 15-minute chart here on pound yen. Actually, let's just ask ourselves. Okay, so I'm gonna get rid of this funky monkey stuff. If we are going to see a reversal, if we're going to see a break of the high line here and continue, or if we see a break and close above this level of structure, then we can predict that we're likely to continue up. If we're likely to continue up, where are we likely to go to? So let's start getting our predictions in place well before this even happens and ask ourselves, if we continue higher, where are we likely to go? I know if we continue lower, I'm looking for 136 even. I know that off the daily. If we break higher, then where are we likely to go to? Latch says 138 or right below. So right in this area, kind of around here, a little right below it, probably taking this level of structure into account. Anybody else? That's going to be a pretty cool level, just eyeballing it for a range breakout. I'll tell you what that means in a little bit. Naomi says 138.40, 138.80s. So Naomi's looking in this zone a little bit higher up here. Right in there. So one thing we can use to dial down that zone is we can bring in some tools, right? We can bring in some Fibonacci's. We can bring in a Fibonacci retracement from swing high to swing low. This is after looking at structure. We can see that we've got a nice 1618, or not, excuse me, not a 618 Fibonacci retracement right in that zone below 138, right? So a little bit of decent confluence there. If we were to measure this, I don't think we're going to get, this is going to be too far for anything of our bigger swing. Yeah, so we won't even waste time doing that. We can take this swing, however, and we'll see a 382 up at that higher level. But a 618 in that first zone, not bad confluence. We talked about a potential range breakout. What I meant by that is one of the ways that people often trade breakouts is they measure the length of the range. So again, taking it from that same swing low to swing high, right? What they'll do is they'll copy and paste that, and they'll say that the expansion should be of equal length. Very similar to like an AB equals CD pattern, but without the retracement, just an equal length breakout. So in this case, if you were to get an equal length breakout, that would take you right up into that 138 zone. So there's a lot of confluence at that zone. I think that's a good conservative level to shoot for. And then, of course, another level after that would be the highs that Naomi pointed out, around 38.70s, right below 38.80s. So room for opportunity here. Room for opportunity here. Now, I would say this. If you're convinced, right, if you're convinced that we're going to see a breakout to the upside, and we get a move back here, or let's do some hindsight analysis. If you were convinced that we were going to see a breakout to the upside, a good entry would have been right here at that false break. Now, again, in real time, this is a very aggressive move. You got to have you got to be very convinced. Let's put it that way to get involved right here. But that sets you up in anticipation of the break. You know, we talk about 3 ways to trade breakouts. One is going to be during the break, or one is going to be before the break, and then one is going to be after the break. So, good opportunities here on pound yen, Das Beast. 15-minute and 5-minute won't give us anything. I can tell you that already. We're within that range, just doing within range type stuff. We could take a quick look at a range bar chart. Maybe that gives us a different story. Let's go back to the 80. Maybe bump up a little bit after that. To see if it gives us anything different than what we've already been seeing. Nope, not much. Same type of situation. So, questions on pound yen? Good stuff. All right. Where do I want to go next? I got pound dollar, sneaky head and shoulders, euro yen head and shoulders, dollar yen 26.18 head and shoulders, Canada bull cipher, euro pound breakout lesson gold. Let's go to pound dollar while we're talking about pound plays, because if we do see a kind of a reversal, some strength in the pound, this would be another one that would move to the upside. So let's see what it looks like. And then we'll take our first break. Pound dollar, the cable, the cabal. All right, pound dollar on the daily. We got little lines in there which tell you it's at a zone I care about. Very interesting location on the daily here, because this zone really expands all the way down to here. I would predict reversal anywhere between 126 and 124. So it's a very spotty and risky zone in my opinion. So I'd want to be a little bit more conservative. With looking for any type of entry, whether you're looking for trend continuation or counter trend. Yeah, it's a big range of uncertainty. And that's being honest as a trader. We don't have to reverse in this level, and if we could, I don't know where. So that's why I want to wait for my reason. So let's get on to the 240, and what we could be setting up here from a higher time frame perspective is a head and shoulders bottom. Now there's going to be one tricky issue with this head and shoulders bottom, and that's this wick right here. This is from a week or so ago, 2 weeks ago. We saw that intraday move. This is going to be a pain in the rear, because really we need to see a close above that wick to give us a clear signal of a bullish move. So that's going to be the troublesome issue, and that wick basically expands to what our targets would be, which is going to be right up here around 128s and 128.60s. So it's tough. But the head and shoulders I was looking for would be like this Here's our left shoulder. Here's our head. We want to see a retest of this neckline, the creation of a right shoulder, and then an expansion up like that. Let's head down to the 60-minute chart here on the pound dollar. George says small bat on the dollar yen, 108.38, 60-minute. Let me just check that out real quick. Mm-mm. 108.38, that can be right here. Nope. 108.38. Right here. Let's get down to the 15. Maybe I'll clear it up. I think it was the same. Yeah, same. Okay, so that level. All right, let's look. 15-minute, maybe give us a clearer picture. Nope. All right, let's go back to the 60. George's bat, X to A, swing high to swing low, A to B. Oh, sorry. Hit the wrong thing. Anthony would yell at me because there's a button that I can do to just undo it. X to A to B, right here. B to C, down here. CD completion, you're looking at a move up at 108.37. 108.37. All right. Pound dollar 60-minute. L says, and if the bat doesn't complete, there's also a potential cipher. Lat says, what at 26.18 on dollar yen has played out, predicted. Yeah, that's the one I had on my radar. My confidence is getting higher and higher. We can go to dollar yen after the break. I had 26.18 and head and shoulders on here. So if we go up here, that could end up being that head and shoulders. Kind of very similar. A lot of these pairs are doing this. But yeah, a little 26.18 in here. Technically a 36.18 if you want to take a look at it like that. All right. Pound dollar 60-minute. Nothing too convincing here on the pound. So just the higher time frame stuff, the head and shoulders, which isn't really an appetizing head and shoulders. Here on the pound. Let's go to, here's an interesting move right here. Because this was technically a higher high, higher close. Here's your pullback. Nice doji type candle here. You get a higher high, higher close from that level. You can make the case to buy it. How far we're likely to expand though, that's the question. And here's a look at the range bar chart. So you've got a higher high, higher close already here in the range bar chart. You do have an RSI swap, right? So the market, you start from back here, trending up, blah, blah, blah. You can actually look at this as a violation depending on how you're measuring this trend. But we go here, price is overbought. We go directly to oversold, right down there. Higher high, higher close. 126.63, stops would be at 126.58, which is right here. First targets would be up here at 126.92. So about a 1-to-1 risk reward. Let's just take a peek back to the 60. We've got a little bit of minor structure right here. But if we do get this head and shoulders, we can look at a move for 127.43s here. Tell you what, if we can come down and get a double bottom here, or at least back in this range, I'll look to buy this up if we can come back. We're too far past that higher high, higher close now, where if I entered, my entry would be up here and it would not give me a good risk reward. If we come back down into this range, I'll look at it as a good buy. If we can get a double bottom, that's even better sign there. So I'm gonna keep an eye on pound dollar on the range bar chart for a potential buy. All right. Any questions before we gear up for our first break? An hour in already. All right, let me load up the clock. I'll see you guys in a little bit. All right, gang, let's get started on round two. Let's start with the dollar Canada, aka the loonie. USD CAD. We'll start on the 1 day. As always, if there's another pair that you guys want to take a look at that we haven't done so already, just let me know. I have an initial list of things that I think would be good opportunities, but I don't mind deviating from that list. George says Aussie dollar. Sure, we can do Aussie dollar next. Dollar Canada daily chart. Still fighting the range game here on dollar Canada. You can see we've been consolidating at different levels over this year, slowly getting higher and higher. The expectation is still that we can see 136 or 136.50s. We just haven't moved in a delightful way up to that level. Our last big movement on dollar Canada came with the interest rate decision, where we spiked up and then got sucked right back down into the range where we are now trading at a minor level of inside structure. Now, what's more interesting about the dollar Canada is that we have a potential cipher on the radar, which is getting closer to completion. And that's really about it. I don't have any interest in any type of structured trade at this level. You can make the case for one. Obviously, you can see we've tested this level a few times. We have a low wick candle test here. We have another test there. We get a higher high, higher close. That would actually be a decent sign to continue higher, perhaps up to about 134.80s. Just not a lot of range there for a swing trader. A lot more opportunity for that as a day trader. But we do have an advanced pattern formation setting up. You can see that if we click the Enigma pattern recognition software, it's going to draw that on for us. Potential bull cipher at 134 even. I guess 134.01 would be technically correct. 134 even. So if we do break lower, that is going to be a pattern formation that should be on your radar. Inverse risk reward is and that's what you're often going to get with cipher patterns, unless you're using a very thin stop loss or you decided to enter a little bit lower in the market. Now, again, if we can get a higher high, higher close above this level, this would be a good sign of continuation higher. I think it's going to be very hard to get a swing trading opportunity on this pair. As you go down to the lower time frames, you would think that would make things look a little bit better. In fact, it doesn't. It makes it look worse, unfortunately. But the same concept remains, where we want to see a break above these highs in order to get some type of break above, pullback, and continuation up to that level. So maybe on the lower time frames, but it's just not looking too appetizing here. Nick says, Akil, do you use the default settings for Enigma tool, or have you changed some settings? The default, I use it. I really don't use it at all, to be honest with you. So I have changed nothing. I rarely use it. Or if I change something, I don't know what I changed. But I doubt I've changed anything in it. If anything, I might have. I know I changed in my cryptographer. I just changed it to how I do stop loss. I believe you can do that with Enigma as well, right? You can change your stop loss. So I rarely use the tool. If anything, I would change this. I don't know what the default settings are for stop loss, but I always change it to. I hate that it says Stokes ATR. Gosh, get that out of here. I use ATR based stops. I don't use the 113. So that's the only thing I would have changed it to, but I'm not sure if 113 is the default or not, or fixed pips is the default. But that would have been the only thing I changed, is the stop loss placement. Yep, but I prefer to manually draw it on, just because I'm a manual type of person. I like to see what I see. Um, Sometimes I'll use Enigma to back when the markets were moving fast, to do a big scan around the markets. We're rarely getting any quality trading opportunities on the lower time frames these days. But in the past, I would just have Enigma up on all those charts just so it can bring my attention to it. If you can imagine, I've got I just took four charts away from my screen, but I used to have four charts on each side of the screen. So I would have, my layout would look like this. My left screen has four charts over here, right? My right screen had about six charts over there, right? So it looked like this. So for like 5 minute and 15-minute trading, it's very hard to it's especially with teaching and whatnot. It's very easy, I should say, to get distracted and miss a pattern formation. So what I would do is I would have Enigma on the lower time frames. So if something were to print, it would immediately pop out to my eye, and I can be like, oh, pay attention to dollar yen, or pay attention to Aussie New Zealand. Um, and then what I would do, I would go back and then look at it manually and ask myself, is this something that I would actually trade, or is it a pattern that I don't agree with? But it would help just bring my attention to potential opportunities, which was a big benefit of it. But these days, right, with this year, we just don't have the same type of volatility in the market that we're used to. And because of that, the lower time frame opportunities, like the 5 minute pattern opportunities and even 15-minute pattern opportunities, are pretty much pointless, just because they don't offer enough. Maybe aside from like the pound yen or some other big ATR pairs, they just don't offer enough potential profit. So it's really been, pattern trading on those this year, and until things pick up again, has really been pointless for me. So I just don't need those extra eyes right now. Ale says, "Wow, yeah, so many charts, right? I just got rid of four of them. I just got rid of four of them because I'm just not using them. I don't prefer to have this many charts up. Yeah, I'm just not using them." Nick says, "Good year to swing trade." I wouldn't even say that. I mean, low volatility for swing trading too. That doesn't the low volatility doesn't really help any type of trader. Um, it just destroys the lower time frames. But I would even swing trading's been slow for me as well. Just everything's been slow. Now, good if you really need a lot of time to analyze the markets. But yeah, swing trading's been slow too. All right, so let's get on to lower time frame on Canada again. It's gonna get messy because this little falling, not even a falling channel, just a falling cluster of bleh, um, is just gonna get worse as we get down to the 15-minute time frame. Is there any type of trade that works well with low volatility? Um, um, Perhaps a carry trade if you're in a position where obviously you wouldn't be in if it's not in your favor. A carry trade would be the only one. But in general, you need movement. Um, you know, perhaps a range trader, but low volatility doesn't necessarily mean clean ranges. So you still have to. I mean, you can have low volatility. We've seen low volatility, and like I mean, this is low volatility right here, and we haven't necessarily seen clean ranges in the market either. But maybe in a range trader, in many cases, would do better in low volatility markets, because you would think in low volatility markets, the markets are spending more time in consolidation. If you're a range trader, and even I guess you can say if you're a pattern trader, because those take advantages of ranges, you see more of those opportunities. But the market also has to be in a structured consolidation. You can have low volatility that is in an unstructured consolidation, and the difference between a structured consolidation is kind of like this right here, where you have, the market's bouncing off top and bottom like that. It's structured. It's doing something. Unstructured is kind of like your normal, just like messy everywhere, like this type of stuff. But I would suppose, in a general sense, a range trader would benefit more in low volatility, because in high volatility markets, you're going to see a lot of trending directional movements, which would just destroy them. So a carry trader would work well too, but that's more of an investment approach than a trading approach, I guess you would say. So I don't know if that would count. Range was, yeah. So yeah, in general, range would, but again, it has to be. It depends on if the markets are in a structured type of range, yeah, and that's always the key. And we can have low volatility and not be in a structured type of range, unfortunately. But in general, yeah, that's gonna work better for low volatility. High volatility, you're gonna get more directional markets, which is horrible for horrible for range traders, and let's put it that way. So yeah, so here on Canada, speaking of ranges, if you're looking for an intraday opportunity, I would look for a break of this range. Again, a break to the high side or a break to the low side. Wait for us to break out of this consolidation and go one way or the other. That will be the only opportunity I see on Dollar Canada. Any questions on the loonie? Obviously, the higher time frame, the bull cipher, still exists as well. Keeping that on the radar. All right, let's go to Aussie dollar next. It is 112, room 112, where the players dwell. Let's go to Aussie dollar and see what's happening for Aussie dollar. Aussie Canada had a nice move, I'll tell you that. Just a random trading thought. Aussie dollar here. You can see that recently on the Aussie dollar, price has come down into the range of uncertainty, right? The wick of uncertainty. The big ranges that we're seeing on many of our charts, where there's a big wick. We have no idea when or if or how price is going to reverse or do anything within that wick. But we have started to reverse here on the Aussie dollar. Let's go down to a 4-hour chart, right? You can see some of our previous notes. We had a consolidation at the high here. We thought we'd see a bullish breakout. What happens was we got, if I remember correctly, we got a false breakout to the downside, or not even technically a false breakout, because we had this wick right here. I think on the hourly, this would have been a false breakout. But we had this range right here. We thought we'd see a breakout to the upside from that range. And we tried to penetrate it to the downside. We traded below this range for a little bit before eventually breaking out to the upside. And now, right, we're trading right below that 70-cent level. And the market is giving us really more of a very rangy type of look. Now, you may be able to make the case for an advanced pattern formation if you're looking at this as an X leg right here. Let's see if that lines up as one. It's going to depend on what your X is going to be. Yep, that's just going to be just short of that 50% retracement. So not there. Um, could be in store for a potential cipher. Perhaps. Let's see. Nope, not that either. George says not sure why I said this pair. Gives us something to look at. Yeah, there's not much here right now. We went on to the 60. I think we're gonna head over to some metals next. Yeah, so so nothing too much here on the Aussie dollar here. Got a lot of weird wicks to the downside, and again, there's a lot of Aussie news this morning, but not too much here. Let me load up my trading view. Let's head over to gold and platinum, kind of like my chain. Last says Euro Swiss had a lower close on the daily, but could be a false breakout. All right, let's go. It's a fabulous thing. One gold. Let's go to what am I looking first? Oh, let's go to gold. Gold, we broke out of our pennant pattern. Again, Akil, let me write down that we're looking at gold, so I remember 117. All right, gold here. We got our breakout. Now it came at the expense of a Gartley pattern, but if we go down to the daily, right? We got our breakout of our pennant pattern. If you guys remember this was a range that we were watching for a while. And we broke to the upside. Now, this is not a pattern formation I trade, because again, I'm not a trend line trader, so there's not a lot I can do with this particular situation. For me, right? Horizontal support and resistance, right? I would need to see that break right there. But each of these levels, each of these stair steps down would be what? They would be other levels of support and resistance, right? In this case, resistance. So it's essentially impossible for me to take a trade here when I only think we're going to go to this level, or when I only think we're going to go to this level. So not a situation that I can involve myself in, but a nice pennant pattern. Now there's two ways. Well, the way that you would want to trade this is you would want to wait for the breakout and the retest. Now, obviously, in this scenario, we did not get a retest at all. So I suppose you can still look for a retest here. You can still look for a pullback in the previous structure into that trend line and a chance to continue higher. Not personally my cup of tea, but in my opinion, that's how I would handle it. Either that trend line or back into this 1300 level for gold. And again, for our overall picture on gold, just taking it back a little bit, we did come into, you can see price action came into that previous zone of consolidation, that big resistance box at the top of your screen, which limits any anticipation that I have of price continuing higher. I need to see proof that price is more likely to continue higher than lower before I make any prediction that price is likely to continue higher than lower. So overall, it's just not a situation I really care about. But it is something that we've been tracking for a while, so it is cool to see. I'll tell you what would be interesting for me. If we came back down, if we saw like a break of this level, that would be interesting for me. And that would be a sign of a continuation short here. But gold, another thing you look for is a pregnant pause, right? The market gave us a solid break here look for some relief. I don't know if it's going to come in the form of a high and tight flag. That would be preferred. It could come in the form of another pennant or another flag pattern sloping down. But you can look for another consolidation pattern to come and look to take advantage of the potential next move up here after the relief. A very good sign would be if we're able, and we are right at structure, but a very good sign here would be if we were able to put in like a high and tight flag. So if we were able to come up and we just did something like this, right? That would be a very positive sign because you can set yourself up with a really, really good risk reward, as stops only need to be, right, below this range. And your targets can be the next extension up. So that's what I would keep an eye out for if you're looking for the next move. If you're looking for a retracement, again, coming back down into the 1300 level is probably where you want to be. Gold questions? All right, let's go to platinum next. Or I had a DXY there too. Dollar index. Let's go to platinum first. This is I told you guys earlier about a lot of my predictions have been on pairs that I don't trade. This has been what I've been spending most of my time doing this year, is just looking at my random list, right? So here is where, if I get rid of all these, I'll tell you where my trading portfolio ends for you guys that are new. My trading portfolio is the first 9 pairs, right? So it ends here, right? So everything above that orange mark is what I actually trade. Everything below that is what I've been looking at, what I've been spending most of my time looking at this year. Yeah. It's yeah. And what it made me think about is just, again, expanding my portfolio. I come from trading a 20 pair portfolio. I come from trading a 20 pair portfolio, which was actually doable. Now this was before day trading. This was before teaching. But I'm at a 9 pair portfolio right now. I am not against expanding it. I can expand it. Would I expand it to 20? No. I think my limit is like 15. I think it is 15 or 16 would be my limit. But I am able to expand it. I just haven't done it yet. So I'm considering that. I'm considering that. It would have to come after June because I'm not allowed to make any changes to anything aside from until the quarter marks. So June is the end of the next quarter. So we have to come after this month. But I am considering expanding it and adding a few things back that were there before. But it would be for swing trading only. For swing trading only, not the day trading. Because none of the ones that I consider trading have a spread that would be day tradable. None of them have a spread that would be day tradable. Talking like your Euro Aussies and your pound Aussies. I'm not interested in having like 5 pip spreads and stuff like that. Lats said they are a bit more interesting. Yeah, and again, it could also be, grass is greener on the other side. They're only interesting because I'm very bored with my portfolio, and that's not in a negative way. I just it's my 9 pair portfolio. I watch it and do analysis on it multiple times a day. I know exactly what's going on with it. Right? You can tell me any pair in my portfolio, I can tell you exactly what's going on. So it's always one of those things where it's like you go to Canada yen like once a week and it's like, ooh, this is exciting. What's happening here? So you got to keep that in mind too. You can't let that influence you. But we'll see. All right, platinum, 124. Platinum came down to our lower level of resistance, or support, I should say. And we blew up off of that level, right? We blew up off of that level. Let's go down to the 4 hour. Hey, Gabby, on platinum. And what do you guys identify here? Something interesting has happened. Could be a better situation, but something interesting has happened. What do you see? Very similar to what we. Well, no. What do you see? Let's leave it at that. And let's take a peek at pound yen while we're at it. See if that has changed any. Are we still in that range for pound yen? At the top of it, pound yen's testing the top of that range. So check it out. Yeah, we've gone through a little bottoming effect here, right? Where we've come down. We retrace, all normal, came down lower close, and then boom, rotation, right? Rotation, right? Look for the pullback. Look for the pullback. That's your aggressive level right there. Your secondary level will be a deeper pullback, not necessarily better, but a deeper pullback would come right in that zone. I think we can expand to our previous level of consolidation, this level right here. I think we can expand to this level, unless I'm missing anything on in the inside up. These two levels. These two yellow lines. So I would look for a potential bullish move here on platinum. Yeah, would not be a cup and handle because we violate this level. A better cup and handle we looked at was on the yawn last week. Was it? Yeah, on the weekly. This is a better example of a cup and handle. This is one that's heavily on my radar. This is a better example of it. Not a cup and handle person, but we don't have that violation yet. So yeah, I would look for platinum here. Now we did double top in 26.18 this morning. This was a selling opportunity that no longer needs to be discussed because it already followed through. You can see your double top in 26.18 here, and then we violated that to the low side, and that's what allows me to think that we may see a retracement a little bit lower here. So either that, or we'll see some type of flaggish type pattern like that evolve. And then breakout traders, be on alert for that potential breakout to the upside and that continuation. Another thing you can look for if you're not necessarily a traditional breakout trader, just wait for the violation of these highs. Wait for those highs to be taken out and then get involved in the ride. Get involved in the ride. Where these are taken out and boom, you're into that upper level. What was that? None of you guys were here. Man, a long time ago, we made up this mythical creature and we called it a pattern. And this looks just like it. Oh, the giraffe pattern. None of you guys were here for the giraffe pattern. Yeah, this is a picture-perfect giraffe pattern. Look at that. Yeah, giraffe pattern, right? Here go the legs. Yep, here's the neck. Here's the head. Picture perfect giraffe pattern. The cool thing about the giraffe pattern is it wins all the time, every time. It's never lost. Never lost the giraffe pattern. Now this is a little bit closer to a camel. Could make the case for a camel. Our retracement isn't low enough right here to have a camel pattern. We would need that retracement to be a little bit deeper here. That'll give us a nice camel pattern. But pretty quality giraffe pattern here. Haven't seen this in a while. It doesn't happen too often, guys. When it does, it wins. When it does, it wins. Yep. All the time. Every time. Good old giraffe. All right, let's go one more to, let's go to the dollar index while we're on here. Oh, yeah. Okay, good. Was looking for a potential reversal in the dollar index, short-term reversal. And Good example of IPDE here, right? Starting with the higher time frames. Dollar index 130. Okay, so IPDE identify. Where is the market trading at? Sex Panther. It's one of the Anchorman's one of the greatest films of all time. I think you killed a man. Yeah. You should probably get out of here. Oh, that's got to be the greatest fight scene. That's got to be the greatest fight scene of every movie. And I'm a big fan of 300. The Matrix, John Wick's, all that fun stuff. It's got to be the greatest fight scene in a movie. Especially when I don't know what they were called, but like the Telemundo, the Spanish news anchors come in. They want to enter the fight too. Hey, essay, we like to get involved in as well. The greatest fight scene ever, man. Greatest. He had a trident, man. Who brings a trident? There's a mace. There's a horse. And they stuck by the... Yeah, I was about to say that same thing, George. They stuck to the rules. No face, no hair. No face, no hair. It's a real battle right there. You respect each other. You can kill. Just don't touch the face or the hair. Great movie. Ron Burgundy. All right. So identify. What do you guys see? Where are we at? What are we doing here? Get back off of our nonsense, right? We came down to previous structure lows, right? We recently broke higher, right? Previous structure resistance. We're coming down. We're testing. We keep probing these lows, right? Nice Gartley pattern, if you guys remember from last week. Or was it a bat pattern, 1 to 2? There's a pattern here. That's all that matters. If you guys remember. I think that I should give you a reminder, right? Boom. Very nice, right in this level. We came down and we've held it, right? So automatically at this point, what are we thinking? We're thinking hold of previous structure support, right? Probe of previous structure support. We're thinking we could see a potential bounce off of this level. Yeah, Powell's going to speak in probably about, I think 9:55 it is, so about 30 minutes from now, I would say. "30 minutes or so, Powell will speak." Yep. Yeah. So we're looking for a potential. We'll keep it simple. You see this on your price chart. Are you thinking I should look to buy or sell? Let's keep it as simple as possible. Buy or sell? Yeah, buy. This is that IPDE process again, and we spoke about this yesterday in the Q&A, and we're talking a little bit about doing testing on multiple time frames, right? And I remember Tony asked a question. He's like, "Well, he's talking about gathering data from the higher time frames," and we went on a whole spiel about how it obviously depends on what you're doing as a trader. But I don't, for me, how I trade, I don't need to gather data from the higher time frames. I only look at it for one reason, or I guess two reasons. The I and the P part, identify, predict. I just want to see where price action is at. Once I see where price action is at, I can make my prediction based on my market knowledge. And that's all I need. I'll go down to the lower time frames for the rest, but I don't need to track that much. I just want to see what has the market done, where is the market doing, what do I think the market is likely to do next, and I can identify that. I'm a structure-based trader. I saw the higher close. I saw the retest. We've come back into structure. I can identify what candlesticks mean in the story that they tell, and I can see and say to myself at this point, right, based on what price is showing me, I should be on the alert for long opportunities. Doesn't mean I'm going to get a long opportunity, but I should be on the alert for a long opportunity. I have zero interest in a selling opportunity, right? Is there anything you can see right here on the chart that says sell? Anything? Anybody? Yeah, this is where you type in no, guys. Yeah, I don't think anyone would want to sell at this particular point. Now, if we break it, that's a different story. If we retrace and you're predicting a continuation lower, that's a different story. But at this point, right, we have a candle that is currently a stronger bullish candle, right? Long wick to the downside, showing us there is buying pressure. We're currently trading near the highs, closer to the highs than the lows, which tell us more buying strength than selling strength. I don't think there's any reason you want to sell right now. So I take that bias, I create that bias. Now I go down to my lower time frame. Let's go down to my 4-hour chart. And we'll go down one more to the 60 because that's what I want to concentrate on, right? But this could be a doji followed by a higher high, higher close, which is a good combination. But I go down to my hourly chart and we look at this little, again, rotation that we've had here. Right? We had price action come down, a little retracement, come down, lower low, lower close, retest of that level, come down right here. What is this called? Head and shoulders. What type of pattern? What type of pattern is a head and shoulders? I'm a little scrunched up here, so it's hard to tell. Yeah, it's a classic reversal pattern. Yeah, right? So we have that higher high, higher close, a break of our neckline, right? We should be expecting a continuation higher. We should be expecting continuation higher. So there's room for price action to go from here to here. If we retrace, even more room. Yes, not a bad opportunity at all on the dollar index. It's a little scrunched up, so it's hard for you to see. I apologize. I was trying to zoom in so you can see it all. But here's a clear look at it. Basic point is we cleared that level. Now that we cleared that level, the expectation is that we should go somewhere to this level. And you can look left for some inside structure as well. And for you guys that like some Fibonacci influence, throw some fibs on it. Swing high to swing low. You can see a 50% Fibonacci level right in that level. 618, a little bit higher. 382, a little bit lower. So, questions on the dollar index? This is one that I like this morning. That's one that I like this morning. Pound yen holding the highs, fighting the highs. Bearish candle at the highs right now. George says, hope he pushes the euro to my target one. Yeah. Let's see some dollar strength. Come out and say some positive things. Just wave an American flag and be like, we're awesome. And then leave. Ride off on an eagle. Ride off on an eagle's back. Yeah, there we go. Trump's gone. Let's party. What if that was it? Trump's out of town. He just Powell starts saying whatever he wants. He gets all ballsy. Speaking of eagles, little known fact. Do you know the owl? The owl has special feathers that allows it to fly silently. Did you know that? Owls are silent flyers. Pretty cool, right? Nope, no owl nerds in here. Yeah. Yep. They're whatever their feathers are coated with. Yep, they cannot be heard. I saw an eagle around here, man. I was on a run the other day, and I saw an eagle. My gosh, those things are big. I've never seen one like up close. You know, you see them on TV and stuff like that. I've never seen one up close, man. That thing was the size of me. An American bald eagle. It was the size of me, man. Like it was probably bigger than me. I wasn't that close to compare. But man, yeah, that thing was. I mean, it opened up its wings. That thing had to be taller than me, actually, longer than me. Golly, yes, it was scary. I'm a good 6 feet. I nearly soiled my underloins. I should have got a selfie with it. I saw the Chuck Norris show. Yeah, great joke, great joke. I saw it. I saw it. Great joke. I was just taken aback by this eagle. Things are so big. I would love to own an eagle, kind of like Khaleesi and her dragons. Like imagine showing up just like to like a meeting in an eagle, and like throwing a fit. Hey, excuse me, where am I supposed to park my eagle? There's no eagle parking here. What's wrong with you? I just want a safe space to park my eagle. I am not represented fairly. I can play that card. It's 2019, right? Fair representation. I am not being represented fairly. Sir, who else parks an eagle? What, you don't? Make it act like it's normal. You don't have an eagle that you ride in to no? Oh. Okay. Well, so okay. I don't know what type of circle you run in, but we've all got eagles. All my friends. Sir. There's a comedian who says he wants to show up to meetings with a falcon and a cape. I would seriously show up if I had a dragon or an eagle. I'd show up on an eagle, man. I think that's the coolest thing. Knowing me, I'd show up in the eagle and I'd be like in some sweatpants and a t-shirt. I wouldn't dress nice or anything. I wouldn't finish out like the part, but I'd have a cowboy hat. I'd have a cowboy hat for sure. You can't ride an eagle without a cowboy hat. And the wife walks in and says, "What are you learning about today? Parking eagles. You're wasting your money learning about parking eagles." We're talking about goals, creating your perfect life. Well, when you get your eagle, Cody, she doesn't get to ride it. How about that? How about that? All right, let's go. No more eagle talk. Cody's wife ruined the fun. Where do we want to go to next? I got Euro Yen. Let's go to Euro Yen next. I would seriously show up on an eagle, though. Those things are awesome. All right. Euro Yen. Another pair that is in the zone of uncertainty, as we're calling these zones here. Let me just make sure I write this in. Euro Yen, we're at 144. All right. Zone of uncertainty. We had a big bearish, a very high momentum bearish candle. You can see there's zero wick to the downside. We followed that up. Dorney Park, nice. How big is their kids section, Cody? We usually go to Hershey. Sorry. We're in the same area, so I'm like, I gotta meet you out at Dorney Park one of these days. We usually go to Hershey. We'll get together for an amusement park trip at some point. At some point, let the kids roam. All right, so big bearish candle, high momentum bearish candle. Followed it up with a bullish candle that sucked up about half of it. Going down on the Euro Yen here. Looking for very similar situations what we've done on other pairs. Potential head and shoulders pattern, potential reversal. Unfortunately, we're just not near that mark yet, but you can see it setting up, right? You can see this shoulder line or this shoulder developing here. You can see this potential head developing here. Now you're asking yourself, could be a trend continuation trade? Yes, it could be. So why are we so focused on potential head and shoulders? It's just because of where we're at in the higher time frame. Does that make sense? On the higher time frame, we're not trading at a place where I'm interested in continuation. Right? I'm interested in potential reversals. So when I look at this, of course you can make the case for a pullback trade. I mean, for someone that doesn't have any perspective on the market, this can be an ideal pullback trade, is it not? Are you not looking at this and being like, well, look at that, perfect. Here's our kill zone, perfect pullback trade. But this is why we do the higher time frame analysis first. You need to set up your bias. And if your bias is look to continue short, well, then all you're looking at is a pullback trade. You're not worried about any type of reversal or head and shoulders. But if your bias is be on alert for potential reversal, you're probably ignoring this pullback trade and you're waiting to see if price can take out these highs. You follow me, guys? So it's all about that perspective, and that starts by just going through the process the right way. Instead of just going to a chart and randomly looking at it, going through that IPDE process. Now, a while before, I guess we never know where that neckline will go to. I'm going to assume that the neckline is going to retest our previous structure. Doesn't have to at all. I'm going to make that assumption. So something that I can look for in a lower time frame is if we violate this level right here, is there any opportunity for me to trade from 121.73 up to 122.20s? And the answer is yeah, right? There's about 50 pips of potential profit in there. So as a lower time frame trader, 50 pips is more than enough. So now I can set myself up from a day trading perspective. And we can see that price has done this little funky little dance, little complex pullback here, then retest the structure there, then failed to make lower lows there, and then we came up and hit higher highs, right? You can look at this as your rotation, and then we came back here, and now we're up here, right? So we're playing the funky dance, but if we can take out these highs, here, I can look for that pullback and that opportunity to go higher up to that, what did I say, 122.20s, up to that level. So that's what I would be looking at as an intraday trader, really as a day trader. This may be an advanced pattern formation as well. Let's see if, I don't know if we're a little bit too deep. Maybe too, no. Deep, could be a deep Gartley as well. So if price does continue lower, we could look for a potential deep bullish Gartley. Small one, but very, very low risk because it completes so close to the X leg. Well, I said I'd like to see a break of 121.30 better than carry to the downside, maybe. So Latch is looking for a break of 121.30s. If we go back up to the 15. Looking for a break of this level right there, that yellow line, and then a continuation back down. So looking for that range break, just essentially just in the opposite direction. Euro yen 50 range, 5 range, I should say. So still similar picture here. So you just gotta wait for movement. Wait for movement on the euro yen. Wait for movement. All right. What else do we want to look at here? I want to take a quick look at the euro pound. Now, euro pound we broke out to the upside. This is an interesting example of, again, kind of the the evolution of a trade, right? Does anybody remember what we were originally looking at with the euro pound weeks ago? Yeah, we're looking at shorting at resistance, right? Price came up to previous structure resistance. And actually, let's just do this. Let's load up Trading View and make a better example of this. So I could throw that easy market replay on. Think and Grow Rich. Side note, I have an Audible credit. Any book you like to recommend? Tons of them. Man, I used to blow through books on Audible. Is it on, I'll tell you what. I just finished the book. You looking for a trading related book, George? I just finished after I got about 90% through and then I stopped. I just finished New Trader, Rich Trader by Stephen Burns. I don't know if that's on Audible. It's kind of like New Trader, Rich Trader 2 by Stephen Burns. It's going to be a really, really quick read. But it's very similar to kind of like Rich Dad, Poor Dad, the concept where it's like a father talking to his son, and this is it's like a newer trader talking to an experienced trader, and it's lots of very, very good lessons, but it's kind of put together in like a story type of mode where like, hey, so I met new trader at the coffee shop to talk about this and blah blah. That's a good book. Very easy read. I don't know if you want to spend a credit on it. You'll probably get through it in like it's a 2-hour read. Let's put it that way. But I got lots of cool books depending on what you want. New Trader, Rich Trader is 1 page long and says go to tier 1. There you go. Shamelessly promote. Yes, go to that. That's my book. Do it. Just do it. All right. Yeah, it's a solid book. Let me just think real quick of any of a good one real quick. We'll get back to the euro pound. I like The Buy Side. I don't know if that's an Audible for an entertainment book. The Buy Side was a pretty entertaining book if you're not really looking to get heavy on trading and just something enjoyment. Pitbull is one of my all-time favorites. If you haven't read that already, Pitbull is a great one. I haven't read Trade Like a Casino. I've heard it was good. Freakonomics is a very interesting book if you haven't read Freakonomics. That's one of my favorite books, not trading related at all. But Freakonomics is an extremely entertaining book. The Daily Trading Coach is good too, if you're looking for trading psychology. Freakonomics is a good one. I might want to reread that. The Power of Influence is good too. A little scary, but good. All right, so let's go to Euro Pound here. And let's go back to this area. All right. So, yeah, Freakonomics is good, man. So let's go back to this point right here. So we're trading at this point in time, and we're looking at this and we're saying, IPDE, identify, predict, decide, execute. We identified that prices come back into previous structure. I think we all agree we're looking for shorts, right? RSI is overbought. There could be advanced pattern there as well, depending on how you measure it out. But looking for shorts at this level, correct? At least looking for shorts versus longs, I would say, right? Now, always remember this, right? Good trades don't last, right? I think that's very important. Good levels good levels are typical. The best levels are respected right away, right? You see this V bottom right here, right? There's a reason this reversed right on that level, right? Boom, didn't hold up. The best trades won't last that long at the level. Price won't hang out there, it'll move. So we see this happening. We get another day in, all right? We still hold that level, right? Anything change in our analysis? No, right? Same thing. We're trading, we're trading within the range. Now, you can start looking for clues, right? There's one big clue here. What's the biggest clue that this may be getting weaker? It's not a clue enough for you to think it's going to fail, but is there any clue here that says, maybe there's not as much selling pressure as I once thought? Yeah, the strong green candle, right? The candle finishes at the very top of the candles range, and it also completes at the very top, or almost the very top of the previous candlesticks range, right? If there was a lot of selling pressure there, we should have saw what a lower low, lower close following that previous candle. Maybe a doji, some type of indecision. We shouldn't see a strong bullish candle at that level, right? But not enough to say like, hey, don't look to get short anymore, because we still haven't violated structure. But it's kind of a first little signal. And for you guys that have grown your trading intuition, it's your first little signal that's like, let's keep an eye on this, right? Let's keep an eye on this. So let's click again. Okay. Now that's a better sign, right? Would you guys agree? Oh, Akil, what was I was so worried. I was starting to freak myself out of the potential trade, like I did, the example I showed you guys earlier. But finally, we got a nice test of that level. I love to see it. I love the probes, right? Probe that level. We saw a rejection. And again, when for you guys that may be new to candlestick formations, when you see that wick above that level, it means that at some point price was trading up there, right? So at one point, that was the highest high and the highest close, and it was beaten down. So if you know the story of it, it means that price actually tried to break that level, and then it got smushed back down. So positive sign, all right? What will be a great sign after this if we're predicting shorts? Yeah, lower low, lower close, okay? Yeah, let's see some continuation in that bear strength or that selling pressure. All right, well, we didn't get that. Looks like it was a weekend. Was it a weekend? Yep. So we got a gap down, and then a close back up in here. Okay, another indecision candle, doji candle, indecision. The market's still making up its mind. Again, there's nothing here that screams don't sell. But again, we're playing around for a little bit, and we're not really seeing any. We're not seeing the sellers really take control of the markets at all. Would you agree? We're not seeing the buyers necessarily take control, but we're not seeing any sellers really take control. And again, we're predicting this is a place where the sellers are interested. Like real estate, good moves don't last. So next candle, another doji indecision. Still waiting for that lower low, lower close. That's going to be the most important signal I would be able to see at this point. And we don't get it. We don't get it. We don't get it. We get another probe higher. Now, there's two ways you can look at this. One way, you could say, okay, well, it's a positive that we spiked up and got rejected again. It's a negative, however, and this is easier seen on lower time frames. It's a negative that our lows are getting higher and higher. So what is this telling you when your lows are getting higher and higher? Yeah, there's some buying pressure down here. And then eventually we get that, not a higher high, higher close, but obviously a strong bullish candle. And I think the rest is history after that. Yeah, the rest is history after that, right? And again, much differently when you go down to a 4 hour, because you're going to have the higher high, higher close here. Clearer picture of that, of what turned into an ascending triangle. and then eventually your break right here. We didn't quite get the signal of a false breakout. Now we did suck down basically all of these gains, but technically it wasn't a false breakout. Oh yeah, and I think we did technically close above on a daily as well. Yeah, you're right. So again, things evolve. What looks like a great selling opportunity at first couldn't change. As price hangs around these levels. Don't let teams hang around, right? Toronto Raptors. Don't let teams hang around. Now, if you're looking for a buy, this level screams opportunity for me down here. This little consolidation before that last pop, right? Price action came down, and then we consolidated, tried to probe a little bit down, and pop. A move down here would scream potential buying opportunity. So that's what I would keep an eye on Euro Pound here. A move down there, an opportunity to go higher. And I don't know overall where are we at overall. Yeah, we can continue higher overall. There's room. There's room to this upper level of consolidation. So again, check it out. Euro Pound's it's a bad pair to trade, but a good example of technical analysis. It's just a very slow, dumb pair in general, but a good technical example. Can you explain how it's technically not a false breakout? Sure. We never break and close below the candle. So if we look at remove drawing tools, if we look at our two candles here, we do not have a lower low, lower close. Yep. All right. Are there any other pairs you guys want to take a look at? We got Powell speaking in about 10 minutes, so it's going to get funky. That alone was worth today's show. There we go. But any other pairs you guys would like to take a look at? We've gone through dollar, Swiss, pound, yen, pound, Aussie, dollar, Canada, Aussie, dollar, gold, platinum, dollar index, euro, yen, euro, pound. All of what was on my radar. And obviously this is recorded. It will be posted later in case you want to review. Yeah, dollar Swiss is in that zone. Harrison says Euro New Zealand. Sure. Specific question on Euro New Zealand or just a general analysis? General analysis. Sure. All right, let's go Euro Kiwi and go back over to my Ninja Trader charts because I like them better. And let's take a look at Euro New Zealand. Euro New Zealand, and we're looking at 203. All right. So Euro New Zealand on the daily, right? We can identify that we have ran into a previous level of structure resistance. We have not violated that level. Erase our notes, right? Previous resistance or highs are right here. We did not violate that level, so we cannot make a prediction higher at this point. Let's go down to our 240 time frame. And you can see that essentially we started consolidating in a head and shoulders type pattern. I wouldn't necessarily call it a head and shoulders. It's going to be hard to measure it. But you can see that we've essentially consolidated here, broke above, came back down, and consolidated on the other side. Now, it makes it tough where if we're drawing out a neckline, something like that, what makes it tough as far as predicting where we're likely to go is that we just don't have a clear level of structure to shoot for. We have some structure lows right here. We have structure lows right there. So it's going to be tough to look for an extension downward. But if you are looking for a move downward, the level I would look to get violated, really right below 170s, this level right here. I'd wait to see you can look for a break here. The problem is you're going to run right into your next level of structure. So it's going to be hard, at least for me, to project profits there. So I'd look to see a break of this level. And even that, you're going to run into a minor level there. But at least you may have some breathing room if you get a break, a retest, and then look for a move down to maybe 169s. But really just a choppy atmosphere here on Euro New Zealand. Yeah, it's a tough one. Let's see what it looks like on the 60-minute. 60-minute time frame. Similar situation. Not a bad potential reversal pattern. Again, it's just the choppiness in which the market moved up. It just makes it very hard to predict where price action is likely to go next. So that's what makes it difficult. Yeah, if you want to pick a zone off the daily, 169, 60, 169, what's this? 169, 63s? 169, 60s, I guess would be the level if you had to choose one. Questions on Euro New Zealand? Dollar yen stopped moving as soon as George mentioned it. But of course, we have Powell speaking in about 3 minutes, so it doesn't surprise that the markets have stopped. That says Euro Swiss short? Question mark? Sure. What time frame, Latch? Any all time frames? Well, I wouldn't say short on every time frame, but we can take a look at Euro Swiss. But who knows? Maybe all time frames are in alignment. That could certainly be the case. That can certainly be the case. Okay, so daily here on the Euro Swiss. Here's a look at what happened. So we technically have a lower low, lower close here, right? We technically have a lower low, lower close, but this is a horrible breakout candle. Not a very strong or convincing breakout candle at all here on the Euro Swiss. So you technically do have your your lower low, lower close. Just understand that the breakout is unconvincing. Now we go down to the 240. What you're looking for is a pullback trade. So you're looking for a pullback and then a chance to get short. And let's go down to the 60. I don't see any reason or way to get short here. Aside from that initial pullback. Here's Powell. Last says can play the break of the B leg. That's what I was thinking. Are you speaking right here, Latch? Yeah, that's the one thing that was the one method I was gonna say to do. The problem is once you break this B leg, now you're right basically back down in the structure already. So I guess the only way to do that, if you were going to go down to, let's say, a 5 minute chart, perhaps like a very low time frame. Let's see. So if you were to go down to, and then you run into some other issues, let me give you a 15-minute chart here. So if you were going to like a 15 and you look for a break of this B leg and then a pullback, then you can use that as a reason to get short there. So that would be the way to do it. I would personally be uninterested just because of that break on the daily, that wick. But yeah, that would be the way to do it though, is you wait for the break of this recent structure and then start the whole kind of trend continuation pullback situation over again where it's break, either get involved in the break, obviously, or wait for it to retest and look to continue lower. So yeah, that would be a way you can get involved. That could be a way. Last, I wouldn't be surprised at a pullback on the daily into the daily kill zone, then carry lower. What daily kill zone? This level here. Around 120. Yeah, we'll see. Yeah, we'll see. I'm not buying this break at all. So I'd love to see a clearer signal. I'd love to see a clearer signal of a break. But it could possibly happen because anything could happen in the markets, guys. Anything could happen in the markets. No problem. Anything else? Here's your euro dollar on your range bar chart, squiggling and wiggling. It's early. It's early, George. There may not be a follow through. We may see the markets go the other way. Oh, stopped out for break even. Okay, never mind then. I take that back. Powell discusses monetary policy, strategy, tools, and communication practices. Powell says Fed will act as appropriate to sustain expansion. Gabrielle shared my giraffe pattern on Twitter. Well done, Gabrielle. Trump praises Powell and wife. What? Says Fed will act appropriate, sustain. Dot plot of Fed rate forecast has distracted attention from how Fed will react to unexpected events. Times of uncertainty, median Fed rate forecast might be best thought of as least unlikely outcome. This is all the stuff that's coming across the feed. George says, I was at 1.5%, and now the only one who got paid was the broker. Yep. And some other trader going against you. Don't forget about that. Some other trader going against you got paid. Them too. All right. Anything else, guys? Any pairs you want to take a look at? Any questions you would like answered? Before we call it and I get this recording up for you, George's like, I'm done. I'm ready to go, Akil. Tested the highs here in pound yen. Didn't quite get the you never got that violation though. All right. I will see you guys on the chat later. If you have any questions, you can hit me up there. Until tomorrow, plan your trade, trade your plan. See ya.